Hello and welcome to Zaks Traders Cafe. Today I'm joined by a special guest, Charles Morris, who is, I suppose, head honcho at ByteTree Research. How are you today, Charles?
Very well, thank you. After a nice bank holiday weekend, they got it wrong, that forecast.
Very boring, actually, but now that the holiday's over, the sun is shining and everything else, so fantastic. I've known of you and I've known you, Charles, for many years, maybe over a decade. It could even be longer than that, but can't quite remember now. You're one of the few people I listened to, or I've interviewed you in the past, but listened to and read up on via ByteTree, etc. One of the reasons is not just because you're actually quite good at what you do, but also because the lay of the land in terms of people writing about the markets is so poor, in my opinion, and that's from somebody who used to be a broker in the 90s, and I've done other various things since then. The reason for the maybe the lack of intellectual rigor in the markets is that it appears that anybody can just turn up and write about the markets, even if they're writing for a newspaper, which is rather irritating. But to illustrate my point, I would say sort of between 1 and 2 months ago, we reached peak doom about the UK stock market. People writing in the papers all over the place that AIM's finished, the stock market's finished, it's a complete disaster. And then lo and behold, a couple of weeks ago, the FTSE 100 goes to a record high after 26 years or 25 years of trying. That seems to me that most people who write about the markets are a counter indicator. So if they say sell, you should be buying, and if they say buy, you should be selling. And that's why I look to you, Charles, for wisdom and wit on the subject. What's your view just about what my gripe there about, one, the people writing about the market, and two, how wrong they have been in the last couple of months?
Well, I think the UK is one of those countries where you can have a free and open discussion, provided it's a negative discussion on the country. So you can't say that the UK is a great place and there's no, nationalism's forbidden, but you can slag it off, and that's fine. The UK discounts been a story that's been going for some time. You're right, it did get very noisy a couple of months ago. But last September, I launched the venture service at ByteTree, and the first task really was to go through the small caps and try and find some of the bargains. And some of the stocks are just, crazy undervalued. And the reason you know that is because, I screen for global stocks, and you just don't find those sorts of valuations in other countries. And so there definitely has been a window of undervalued blighty. And there are reasons for that, things like the stamp duties, one of them, the pension funds and other institutions exiting the market, the heavy regulation making it difficult for wealth management to actually own individual stocks rather than collectives, particularly tracker funds. These are the sorts of things that have just made the place less attractive. And from your perspective, you're more of a, sort of corporate financier broker type, as I see it. And your angle on the market of IPOs and so forth, that activity has been very slight as well. And of course, we are an open economy, and, the Americans keep coming and buying our best companies. And so, what's left?
Well, that's the good bit. The good bit is that, like the other week, Dark Trace received a £4 billion or dollars bid. That hopefully some of that money will come into the country because we need the money. We're short of cash. We've got a big welfare state to support. But I think just in terms of what you said then about describing a stamp duty, this, that, all the other negatives that there are on the London market or in the UK. If this was a murder mystery, you would sort of say, did it fall or was it pushed? And I think it was pushed. I think it's a deliberate 25-year strategy, probably by people who are maybe on the more socialist, Marxist political spectrum. And they actually can't stand the elites who appear to occupy the city, and can't stand fund managers. They can't stand people making money because it reduces their dependency on the state. And obviously, big state is best.
Yeah, I mean, I spoke to a fund manager, a bond fund manager. I won't mention his name because he hasn't given me permission. But he was saying that these days, managing a large bond fund, and he manages a very large bond fund, every single trade has got to be documented. In the old days, there was quite a lot of activity. Was opportunistic. You'd see a price and you'd take it, because if you're an experienced fund manager, you have a sense for these things. That's why you're in the job. But now you've got to sit there and write a yellow pages type document before you can put a trade on. And this is really quite extraordinary. But to your point, if you want to destroy the UK market, what would you do? You would heavily regulate it. you'd put barriers into people's way. I mean, here at ByteTree, we know a thing or two about crypto. And one of the things that people don't understand about crypto is it's a free market. So whatever you think of it, we park that to one side. But if you're a young entrepreneur today and you came along and said, I'm going to float, I'm going to raise some capital, I'm going to float an AIM stock or whatever, which is supposed to be lightly regulated to get some growth capital going in the country. But you'd find it too difficult now. And the listing fees, you can tell us what the listing fees would be, but they're a lot. And there just isn't the investor base that would readily back a young entrepreneur like there is in the United States, for example. And I think then they look at crypto and they say, oh, wow, off I go, by Friday. I've got an entity going, I've raised capital, and there's a room full of people doing productive work, we hope. And so, we have got to a situation where we were leaders with the AIM and so forth in having a dynamic stock market, and it's no more. But inherently, this is a great country with great people in it, and it doesn't have to be that way.
Well, I think we obviously great people. I'm too modest to say anything about that. But the situation there, as I said, is it looks as though this was a deliberate strategy to me, and it's worked very well. And therefore, all the people complaining about it are actually complaining. It's just that job has been done. It's the Reagan phrase, which I like, is if it makes money, tax it. If it keeps on making money, regulate it. And once it dies, then you try and once it's on its knees, then you subsidize it. And we're getting to the stage where we need to subsidize the stock market. But the stock market is hated. It's not a vote winner, and the men in bowler hats have gone, but they've been replaced by people who are equally disliked. And it just seems to be a political football. It's a shame that it's 10% or so of, well, it was 10% of our tax take in this country. But that seems to be the case. I think there's, the Bitcoin analogy is fantastic, or the crypto one is fantastic, because, at one point, Bitcoin was, a few $100s and gold was, $1,500. And then one day, about 5 or 7 years ago, Bitcoin overtook gold, and it's it's remained well above it ever since. For me, that was the big buy signal. If hot air can be worth more than an ounce of gold, then hot air it is. And that proved to be the case. And it's absolutely brilliant in that way that crypto does remind me of the small cap market of the 80s and 90s, which I remember a bit of the 70s as well. I remember particularly from just after the crash in 87. And you'd have little stocks then which were a penny and they go to a pound, etc., etc. You hardly ever get that now. It's almost impossible. You just do not see that. I mean, there's a company just listed last week at 10p. It's now 18p. It's a helium company. Maybe that'll be the one that goes from 10p to a pound. But very rare now that in the UK you get those multi-baggers, 10x, 20x, etc. And in America, which I look at all the time, with the US stock rises, it's interesting that probably half the stocks which are the risers are either tech plays or they're biotech plays. And in the UK, we don't have any of those. We basically have none of those. So it's just oil and gas and mine, and resort, mining stocks. And either there is something in the hole in the ground or there isn't. And it's normally better not to have a look. And that kind of joke. So that's what we've got here. And it is, you just sort of think, well, actually, the best thing is to head off to America.
Yeah, so some of the uncomfortable sectors are where you get the best opportunities because they're misunderstood, and that's where you can create value out of thin air. And so you've got things like mining, as you say. Is there something there? Is there not? Well, the difference between 1 penny and 1 pound would be the answer of whether there is something there or if there isn't.
Mining tends to create the thin air out of money. Actually, that tends to be the way it goes around here. But that's maybe a bit cynical.
And then you've had in the technology sector this sort of in the old days, technology was quite hard work, to invent a physical thing. But these days, it's an idea, and then you could create a network of 1 billion people in a heartbeat. And that's another way of creating huge value in an instant. And our market, sadly, is not there. And it won't be for a while, because if you look at things like AI, I mean, they're going to chomp electricity. I mean, Zuckerberg's been talking over the weekend about to build all the data centers to facilitate AI. He'd need his own nuclear power plant, the size of, the equivalent of basically size will be. And this is the most important thing in the whole of economics, is that if you want to grow your economy and have increasing productivity, which basically means better lifestyles for the people, you need to consume more energy in a productive manner. And so if your policy is we do not want to A, have cheap energy, and B, consume more of it, then you have no chance of growing. It's as simple as that. It's a fact. You cannot have energy-free growth. There's no such thing.
But we're going to net zero. I mean, on every single point that we can discuss, there is, as I said, I mean, if you're generous, you say it's an accidental state that we're in. If you're like me, increasingly like me, then you would say this has been a, it's so wrong on so many fronts. It can only have been deliberate. There has to be a mindset behind all this. In terms of the energy situation that we've had, the energy security, that's a zero. In terms of obviously the way the welfare system is going, that's a zero too, complete disaster. You can sort of die of old age before you get a hospital appointment. And the stock market, again, another total disaster. I mean, it's amazing that we actually have, I was going to say the train's running on time, but obviously there's a strike today, so that's out as well. And obviously the strike started after May the 2nd, when people have stopped voting. There hasn't been a strike for a couple of months on that. So everything is very well thought out in terms of that. Nobody's reported that either, right? It's all just happens to be after the local elections. So and if I had the time to write it all out, there would be even more coincidences like that. So if we're in a sort of deliberately created nightmare, is there a way of taking advantage of it? And if, because obviously it's not going to change anytime soon. I mean, the Kafkaesque rules, the Orwellian rules you talked about with the fund managers and everything else. I remember that situation. I was working for a financial institution before I listed my company a couple of years ago. And literally, you can't say anything. I mean, you can't say anything whether it's off topic or on topic, because you've got that sort of fear of God and everything else in that area. So we don't have a culture at all now of creating wealth or value or being creative at all. And the only people, especially the only people who are probably a bit of the outliers are the people over 50 who remember the old times and maybe are less afraid to speak, or maybe don't care anymore about what they say. Hence, we're here now.
That certainly describes you, Zak. But I'll give another example that's very clear, and that is Bitcoin ETFs. So Bitcoin ETFs happily traded in the United Kingdom. I mean, they weren't on our stock market, nor were they domiciled here, but you were allowed to buy them as a member of the public, as an investor, and they were in Sweden and Germany and Switzerland. Until 2020, and it was after the new guy came in at the FCA. It was a few months after he came in that it was one of his first things he did was ban it. I forget his name. And so they've gone now. And now you say, so what? Okay, Bitcoin's a Ponzi scheme. Some people might think, and all that, fine. But that's, but let's call it how it is. In America, there's a $60 billion industry. So they allowed them to launch on the January the 11th, and you've got BlackRock in there. So BlackRock are not going to engage in a Ponzi scheme, nor a Fidelity. And these guys have got over $10–20 billion kind of thing in.
Well, no, if BlackRock gets involved in it, it stops it being a Ponzi scheme. It's a bit like the Richard Nixon phrase. If the president says it's legal, it's legal. It's that kind of thing, right? So that becomes a self-fulfilling prophecy in that way, right?
Yeah, well, it's a network. Networks can rise and fall. Simple as that. I mean, it's quite possible that Bitcoin goes to zero, but I think it's very, very unlikely now. The chance of that is so low, because it's just got through the last, all the hurdles of the last 15 years. And what you've described earlier as a deliberate attempt to destroy things. The society couldn't have done more to try and destroy Bitcoin. The banks, even 10 years ago, the banks were saying you couldn't deal with it and all the rest of it. So they created stable coins. Stable coins are the new euro dollar, basically. They've become an extraordinarily large $150 billion industry in their own right, supporting this network. So actually, it's a bit like SWIFT after Ukraine. The Chinese have created a workaround. Crypto's done this. So crypto doesn't need the system anymore to carry on thriving. And I think that's fascinating. But the point about the ETFs is, you've got a large industry, in America. Hong Kong have accepted Bitcoin ETFs. The European Union allow them. Switzerland are thriving. Brazil's thriving. Canada, these sorts of places banned in the United Kingdom. And so, how can you have a thriving stock market when in the same example, you would basically have can't trade Bitcoin, and so therefore the sort of market that doesn't do that is clearly not going to be a very dynamic place for young companies.
But being generous, it's more. It seems to be more people sort of saying, well, it's not. It's a jobs worth mentality rather than an anti-Bitcoin mentality. Because if you've got your 9 to 5 job and you have to actually do something different, that creates more work. Whereas people here seem to just want to do the same thing day in, day out, or year in, year out. And so maybe it's not a conspiracy against Bitcoin or crypto. It's just we've done these things in a certain way, and we want to keep doing things in a certain way. We don't ever think about having the average person in the street, having not only their current account, but then also their crypto account and this account and that kind of thing.
Okay, fine. I get that. And so they're basically trying to steer everyone into the same portfolio for their retirement plan, which is a 60-40. And the 40 will gladly pay for bonds at the price that the government basically wants to sell them at, which is probably not a good deal for you in most cases, certainly in recent years. And then the 60, they want your equity portfolio to look very, very dull. And by the way, the equity portfolio is going to become increasingly international, like we've just seen with Coutts, who have taken a whole load of money out of the British stock market and put it global, which basically means throw it to America, because that's 2/3 of the world index. And that indexation, when indices become too popular in an investment strategy, then you're just shoveling money into the bigger stocks, and that's another problem. And so you've now got these huge companies in America, which basically rule the world, and it's being fed by a financialization policy. I think that if
But what are Coutts thinking there? I mean, it's literally they're actually shooting themselves in the foot, because you just sort of say, well, why would I open up? Well, apart from the debanking issue. Why would I open up an account with Coutts? I mean, it's supposed to be a British bank and everything else, and they're taking money out of the stock market. I'm out. I'm not giving them any money. I mean, even if I, in the unlikely event that I was up to scratch and I was a Lib Dem who believed in whatever the Coutts believe in, there's I'm not that for me was a massive PR disaster, almost as bad as a debanking actually. Just saying that we're just sticking 2 fingers up at the UK.
Yeah, it's a strange one, isn't it? And I think it's it's a very bad investment decision as well, because damn well as an experienced
Selling cheap, selling something which is totally on the floor, and presumably buying somewhere which is right at the top. So they'll be buying to the dip in Tesla or Palantir or whatever it is, that kind of thing. They're just going to go for that.
Yeah, I mean, to predict share prices over the next 10 minutes or 10 days is very dismal. Let's call it impossible. Luck is probably your best strategy there. And over 1 year, 2 years, fundamentals probably play out. But over 10 years, value trumps every time. And no question, the cheap market will do best in the next 10 years. Might not necessarily do the best in the next 10 minutes or 1 or 2 years, but in 10 it will. And so, you've basically, the buy FTSE, high chance of outperforming the world over the next few years. And indeed, the FTSE was always a proxy for the world index. And up until 2014, the FTSE was basically the world index in 100 stocks of sample, because you had big oil, big bank, and this sort of thing. But it was only really after 14 when tech became de rigueur and dominant in terms of EPS growth. That's really when things changed. And of course, there's no tech here.
Charlie, you said that value will out. The UK market has taken 25 years to go to a new high through 8,000. Was that part of the waiting for value to out process?
Well, to be fair, stock markets can do that. I mean, so it had a very good run in the 1990s, of course, exceptionally good run, 80s and 90s. And for example, the Dow Jones index took, I can't remember how many years it was, but 1929, so was it 1956 or something before it made a new high? It did it again.
I remember it well.
yeah, 1972 to about 85 or whatever it was. So you do get these long waits. Japan, depending how you define new high, basically they're just having a go now or have just done it. And that's 1990 to 24. So that's 34 years. The Kospi was like that to from 1990 to about 2005. There are loads of examples of stock markets that can take a decade or two or more to do
And
that.
it's the same with gold. I suppose it's the same with gold as well. The gold, it got stuck around 2000 when the dam burst. I mean, it should actually then just keep going, right? It should,
Yeah.
but probably won't get up to the $60,000 that, or $70,000 that Bitcoin has, but it might give it a good run for its money.
Oh yeah. So Bitcoin in gold. I think it's now at 26, isn't it? So one Bitcoin's 26 ounces from memory, and so you want it to go back to one. So there's two ways for that to happen. One is for Bitcoin to collapse from $63,000 down to 2,400 or 2,300, and the other way is for gold to roof it. I hope gold roofs it if you want the Bitcoin gold ratio to go back to one. But because of course the bold index, ByteTree's got a bold index, which is Bitcoin and gold risk weighted, and that's something that's another pretty interesting thing that we do, which we haven't mentioned, but another time perhaps.
Well, no, actually, I want to mention ByteTree this time because hopefully people got a little bit of the understanding or an understanding of what the name of the game is in terms of choosing between different asset classes. What's your focus, and is it a movable focus, or is it describe to us what it is?
So ByteTree Research, I mean, by background, I'm a fund manager, and I set this up really to, in a world where research is basically dead, certainly from the city going to retail investors doesn't really happen anymore. So we're regulated and we're permissioned to basically talk about stocks, and we do a little bit of bonds, not much, a fair bit of commodities, mainly precious metals, and then we're also pretty good at crypto. So those are the four things that we cover. We like value, we like quality, we like trend following, we like growth, we like common sense. We don't really speculate. Not in my eyes anyway. Everything's got a sound reason behind it when we make a decision, and I think that our track record has been very good, and that's on our website. But really, a lot of our track record has come from good risk management. And so, although we have outperformed on all our portfolios, the various benchmarks, but we've done so with less volatility. So that's an indication that you're not taking stupid risks and you are identifying the good stuff by and large, and keeping the portfolio sufficiently diversified. So it's kind of textbook boring stuff, but actually it really makes a difference long term, because most money is lost in investments by making mistakes, and by trying to avoid making mistakes, then that just leaves the good bit.
And just to reiterate, was sort of where I came in was basically dissing what I read in the papers and most of the conventional sources. There is a difference between what the agenda of the papers is and what you do.
Yes, I mean, the business section of the paper is not really something I read much, so I don't really know what's in the papers. but I have to say, I do, when I'm analysing a stock, I will do a search for the recent stories on the FT or something on a particular company, because you'll give you something, and I think most journalists are pretty good at. Maybe the opinion might be skewed in some cases, but generally they're pretty good at facts and recording. Even though you've got to bear in mind that most results are PR driven, so you have to take that into account. But they will help you shape a story, because I'm a quantitative investor. That's I look for situations, and there could be 3,000 stocks in my universe. And so when I come across a company, I don't necessarily know much about it. So one's got to read up on its history before you dive in and buy it. And I think the newspapers can be quite good at that sort of thing. But really, that's another point, isn't it? If you give yourself a huge net, if you cast a wide net looking for little opportunities, then you're going to come up with some good things. Whereas if you stay narrow in a tight area, then you have to wait for that area to kind of do well, make it much more difficult, I think. So being flexible, being global, and that, by the way, takes us heavily into the UK right now. Our venture opportunistic portfolio is stuff full of UK small caps.
So in a way, Coutts is a contrarian indicator at the moment.
Well, I had to say that Coutts, and so people would remember Coutts right now for the Farage debacle. But if you go back 20 years, I recall that after .com, they were very big into hedge funds, and they were quite early on that. And I don't know how that worked out in 2008, probably not that well, but it certainly worked well in the .com bear market. So I remember there was a period where they were in the late 90s and the early noughties, where their clients did pretty well in markets when the FTSE and S&P 500 halved, basically. So there was a time, but I would think exiting the UK right now is a really bad decision.
It seems to be like politically motivated. A lot of things, I think, at the moment, which are supposed to be which were never political before, like having a bank account, are now a political situation. I've spoken to people who have said, I've got somebody, phone call from my bank saying, oh, you've spent some money on this, you spent some money on that. And it's not just the Pornhub account. It's other stuff as well, which has got nothing to do with anything being at all. So it's crypto, it's political, it's a donation to a political party. I think if this person made a donation to the Lib Dems, it wouldn't have got a phone call just before Christmas, et cetera, et cetera. So they're looking to see what sort of person you are, when after all it's your money, or is it your money? That's the thing there. So I think if there was an opportunity in that if there was an anti-Big Brother play, that would be very interesting at the moment. I'm not quite sure who, maybe that's Twitter or X. Maybe there are things around which are, people who are sick of, it's a bit like that film with the Network, with the guy who was sick of it, Peter Finch's character, who's sort of sick of everything. I'm not going to take it anymore. I'm mad as hell, or whatever it is. We're sort of in that kind of it's perfect for a middle-aged person, actually, all that. But are there any plays against big deep state, big state, Big Brother, etc., etc.? Maybe that's the maybe gold's the play for that. Or I suppose crypto is the play for that. If you hate regulation, you'd be buying crypto and you'd be buying gold.
You don't even have to buy crypto. You can buy stable coins. So as I said, this
Right.
is a digital dollar or a digital pound, but obviously the digital dollar would be more liquid, and it trades 1-for-1 with the dollar. That's it. So you can actually be in crypto but not have any of the volatility. And what's special about this? A lot of people don't really understand the difference between a bank deposit and a digital dollar or a stable coin. And a bank deposit is, you're lending NatWest the money, and with a digital dollar, you're not. It's just a dollar that's you've got that $1 bill, you wrap it up, you stick it down the phone wire somehow, magic, and there it exists in cyberspace, and that's what you have. And I do see, and it's happening in crypto already, but a more consumer friendly versions of crypto banks where you could just live in digital dollar land. And it goes back to the 70s with the euro dollar and all that, which is basically dollars that live outside of America. And the headquarters for all that was London. And it was a huge boost to the UK economy and to the City of London status to basically create this new industry. And stable coins, it's a sort of thing that London will be the natural hub for global stable coins, digital currency. And we're not. We're sort of regulated to death.
Yeah, well, no, I think the explanation for that kind of London not being the centre of many things that it should be the centre of is it's a bit of the post-Brexit punishment beating, because given that we voted the wrong way, the powers that be want to show us that we're going to go into horrific decline. So basically, shooting us in the foot and all the opportunities, or as many opportunities as possible to come through, is the way of showing that, look, you voted in 2016 this way, and look at that. Since then, everything's gone completely pear-shaped. We're not the center of anything anymore. We're very small, and we're going to wither and die very soon unless we go back into that kind of thing. So that anti-Britishness is actually pro-Remainerness, which is fair, fair enough. But obviously, it depends whether you're stating it out aloud or not. But these sorts of weird things that happen, like the Coots thing, I think are part of that kind of plan. But obviously, we'll never know. We won't.
It's definitely fashionable, and especially for the youth, to not be particularly patriotic. And my kids have done well with that, but generally speaking, when they're friends, they're not. They're just not.
No, I think the main issue that we have at the moment actually is the tax the level of tax, which is so high now. You want, obviously most people now don't work on a Monday and a Friday because it's, but we're all twats now. But you just got, and there's a train strike, et cetera, et cetera. But I can see that the level of taxation actually is a massive demotivator now for people. And why would you bother? Also, if you're a bit older, why would you bother? If you're a bit sick, why would you bother? We really are in that kind of situation. And I don't see a way out of it because obviously the welfare I think we're heading for a 1976 IMF bailout type situation, because there's there are not going to be enough people bothering to work and creating wealth. So that's the issue, and
So
that is an issue, which is going to probably affect, that's hopefully not going to affect the stock market before your call is correct, but it is something I think down the line. These cycles never end well.
yeah, I mean, basically what we're doing.
Once you go onto that sort of 1970s type thing, or the 1960s, you either have to devalue the currency or you need a bailout, or both, probably. I
So
think we're heading for.
we're doing exactly the opposite of what Milei is doing in Argentina, basically. So he slammed the brakes on the mess, the economic mess that the country got itself into. He's been completely open and honest with the people of saying this is going to be.
Who does that?
And the result is that he's got popular support, or not. The papers that we read here wouldn't reflect that, but certainly talking to people I know there, they say he has got the nation's support because they realise they need change. What the direction of travel of where they are today is not working, so therefore we have to do something different. And he's managed to balance the budget, and he's chopping and axing government departments and all the rest of it. And it's going to get much better. I mean, the bond market agrees with him because an Argentinian dollar bond was $15 this time. Sorry, in the autumn, and it's now $60 or whatever. And so that's the credit market saying, okay, this is working, and it's a very, very exciting experiment because I don't think we've ever seen anything like it. It's Thatcherism on steroids, and
yes, monetarism squared.
Yeah, and so and we're doing the opposite. We're just believing in MMT. Well, we don't quite believe MMT works, but we sort of think it might work. So we can just sort of keep it, just sort of create. Well, we haven't sort of created money for the last couple of years, but there are other sources of liquidities, and there are large deficits and that sort of thing. And so we are living on depending on money trees for our survival. And the attempt to balance the books every time just means higher taxes for the earners. And no point is anyone discussing the level of public debt, which of course is bigger than it's been in wartime. And some people say we are in wartime, well, they love that excuse, don't they? But it's unfathomable. And if we do have an inflation problem, which we probably do because the economy is less efficient than it used to be, so therefore that means structurally higher inflation, then those interest rates are going to stay higher for longer, and we've got to pay for that. That means we have to pay this huge amount of debt, the interest. I mean, it's pretty obvious stuff, but it surprises me, to your point earlier, why no one's talking about it in politics, why no one on the left nor the right seems to care about this monstrous debt and the fact that it's a downward spiral.
Well, I think the other thing is that the irony is that the current government's about to get kicked out whenever it's obviously the last minute, whether it's November, December, or January, with 14 years of Labour and Lib Dem policies, not Conservative policies. So you've been hoisted by someone else's petard. It's amazing.
Yeah, it is amazing,
and that's the thing that nobody's. I mean, that's the thing apart from me, obviously. And luckily, I can speak in total anonymity because I'm not part of the system. So I could. I mean, it's one of those things. I could come up with the correct level of the FTSE every day for the next year, and in the current environment, nobody would hear me. It's that in that kind of world, unless you're you're the right sort of person, you're cancelled before you even start. But it is amazing. I think that the Conservative government will, if it gets kicked out, will have been kicked out with not without one Conservative fiscal policy that I can think of.
Yeah, I mean, it's the environmental one, which was Carrie Johnson's. I mean, it wasn't even in the manifesto. So all that net neutral by 2030 and all that stuff. None of that was and that was just months later. It sort of came out of nowhere. all this green stuff on steroids, and it was just so much of it. And the other one was banning North Sea oil or super taxing it to death. And there have just been several things. Oh yes, and you've had Gove, blocking all sorts of development everywhere. And we can't build data centers here, which are essential if you want to be a part of the tech revolution. There's not enough energy for them.
Well, the blocking development, I think, is directly to maintain the price of to maintain a housing shortage, because the housing market is the government's golden goose. So therefore that explains that. I mean, all these things have explanations, but it's something we could probably do a series of maybe 5 of these videos and touch upon all the things, and it wouldn't take more than half an hour on each to touch on all those areas and why they're wrong. But it doesn't require Einstein to work it out either. It's a deliberate policy, and as our friend in Argentina has shown us, it just takes one, and as Thatcher showed us, you need that sort of, at this stage, we need some kind of person to, some savior to come in and change, because no normal person, everybody else is just going to go along with the tide. It needs somebody to say, right, that's it, that's enough, no more. We're getting rid of this, we're getting rid of that, and have that mandate, or create that mandate to do it. But I think we're very near to a Thatcher moment, and I can't remember the guy, the wonderful guy in Argentina. When we're going to have something like that. Farage was supposed to be that person here, but obviously he's chickened out, taken his $1.5 million from I'm a Celebrity and doesn't need it and doesn't need the money anymore. And so therefore we still need that. We need that person to step forward. And it was Liz Truss for 49 days, to be fair. But once it was realized that she was going to do something, she was out. I mean, that was the thing. That a mistake was to do what she said she was going to do. But the way we're going, it's just going one way. It's going one way to a devaluation of the pound and a bailout of some kind. And I would have thought you realize that those are the two things. Whether or not that's actually bad for the stock market, I don't know. I think that probably in a way, the 0% inflation that we had for 10 years was not actually great for the stock market here. We actually need it. Stock market needs a bit of inflation. Probably 5% is actually the right amount of inflation for the stock market, and then it gives you a 10% return on the year. That's the right thing for the market.
It depends on the kind of stocks. Growth stocks don't like inflation at all, because they like high multiples, high PE ratios. And the history of inflation is it does shrink. It does put downward pressure on the valuations you pay. But yes, it is true that inflation will increase the nominal GDP growth, which would increase top line revenue growth, but at the expense of higher costs. So, all in all, if I wanted the stock market to do well, I'd prefer low inflation to high. But that said, you can have hyperinflation situations where the stock market does very well. Look at Turkey today. Look at Pakistan.
Well, no, you have individual companies that are just like having a party through high inflation.
Yes,
it might be ice cream sellers, or it might be concrete makers, or whatever it is. But you have everything's thrown up in the air in that kind of environment, and therefore all of a sudden somebody's doing really well and somebody's doing really badly, and you pick off obviously one.
Real asset companies do very well. And ironically, also banks. Banks, everyone assumes they go bust in a hyperinflation situation, but they don't. They survive it. And one of the reasons is because they pay out less interest than they take in. And so, it doesn't really matter what the inflation is, just to a certain extent. They survive. No, it's not necessarily great for them, but they survive in a way people think they don't. What don't survive is all the fancy stuff. So your sort of Gucci handbag maker or whatever, no chance. So those things are toast in a heartbeat. Also support services, so white collar workers don't tend to do so well. But heavy industry is fine. Heavy industry will sail through.
Well, hopefully we won't get to that nightmare scenario, but I'd like to just finish with you. People like what they've heard from you, and maybe put what I said to one side on some of my views. But if they like what they've heard from you, what do they do as far as ByteTree is concerned, and how do they get involved?
Well, we're ByteTree.com. That's BYTE. So the joke there is bits and bytes, from computers. a byte is 8 bits. And so ByteTree means money tree, and which was my sort of humorous name for what was a quick crypto related business in its early days. But now we're all round research. So go to ByteTree.com and loads of free stuff. We write about gold for free. We write about Bitcoin. We write about our bold index, Bitcoin and gold. And then there's a sort of weekly commentary as well. So, if you like that, then figure out what the next step might be. But sign up at ByteTree.com. And we're also on Substack under the name ByteTree.
Charlie, pleasure to talk. It's Charles Morris from ByteTree. Hopefully we will speak again very soon, especially when there's something exciting to talk about in the market.
Thank you, Zach.
Cheers, Charles.